A lot of people ask me, what the hell is Bitcoin halving? And do we actually use a knife and cut Bitcoin into half? Or are we actually cutting our currency into half? Like imagine if you have a US 100 US dollar, and if you cut it in half, then maybe you divide the 50 US dollar to one another. So, but of course, it doesn't happen that way. And because there's a lot of questions around this topic right here, then I've decided to actually generate a deep analysis on the historical patterns, and also to talk about the events and its cycles, so more in a more detailed way. So, and also, where are we right now in this event? So of course, right on the very first introduction, we would like to talk about the creator of Bitcoin, and his name is Satoshi Nakamoto. So a lot of people say that's a pseudonym, and it's like a nickname, and like nobody knows who's the real creator of Bitcoin. But okay, now coming to more important point that we want to relate to the Bitcoin halving events is that this currency is created to be completely inflation free. So now, if you look at the sentence right here, here it reads that once a predetermined number of coins have entered the circulation, the incentive can be transitioned entirely to transaction fees and be completely inflation free. So this is written in his white paper. And what is most important right here is that what are the mechanisms to make it inflation free? Now, most of the time when we talk about currency is that most of the time we know that the central banks are printing a lot of money, and well, we don't see a limit, so it's like an infinity numbers out there. So whenever there's a money printing going to circulation, then that's actually creating a lot of inflation, and it would be debasing the value of our currency. So right here is that this currency is supposed to behave the opposite way. It's deflationary. So right now, if we talk about the Bitcoin supply limit, this is a mechanism that's added to become deflationary. All right. So on the April of 2021, we have we see about 18.7 million Bitcoins in the circulation. So that means there's around 2.3 million Bitcoins to be mined, for the remaining Bitcoins to be mined. So now you can see the reports of halving events versus the block rewards right here. So now the first halving event was executed in January 2009, and that's where it rewards about 50 Bitcoins per block. So miners, when they mine Bitcoins, they come in blocks. So whenever they have mined Bitcoins, they are rewarded as 50 Bitcoins as an incentive per block. So every time there's a halving event, let's say the next one was up 4 years after 2009. So then this 50 Bitcoins per block was reduced to 25 Bitcoins per block. All right, and then again we have like the third halving was in 2016. Then 25 was reduced to 12.5. So every time there's a halving event, then it actually brings the number down, Bitcoin's number down per block. So the latest one we had was about 11th of May, which is 1 year ago, 2020, 11th of May 2020. So the next one projected is to be around 3rd of September 2024. So in year 2024, and that's like 3 years from now. This is just a simple tabulation that you can find reported in any websites. So I've done the more detailed tabulation, and what we can see here is that the first halving event we could not see in our price chart. We can only see the price chart starting on the 7th of July 2010. So which the starting price is around 0.06. And at the time the market top from 7th of July to 8th of June, which is a 1 year and 1 month duration, has topped at 32 US dollar per Bitcoin. So that's around 53,000 gains, and which means if you have invested 1,000 at the halving event, if you have invested 1,000 US dollar, you could have already 530,000 US dollar within. This is within 1 year and 1 month. All right, so that's pretty. That's actually a pretty fast in making money. But of course, the crash was around 1994. So when people say there's a lot of volatility in a crypto world, and this is what they meant. So every time after the market top, it crashes between 80 and 90%. So right here we can see the second halving was about 28 November, and then at the time of halving, the price was around like 12 US dollar per Bitcoin, and at the market top it was around 1,242. So which means this is like 10,264% gain. So which means if you have invested about 1,000 US dollar on 28th of November at the halving event, and then so you get to about 100,000 US dollar. So and that's just 12 months. All right. So you got to be very good at price actually, because most of the time Bitcoin, when the market tops the next 1 or 2 days or the next week, then you'll see a huge crash, like a 20-30% at least. Well, we'll go to the price chart a little bit later. Now, of course, this is just taking the halving event. It's not really the market bottom. This is the halving event to the market top. So what about taking the market bottom? All right, that means that's before the halving event. 162, sorry, $2 before it comes to this halving event. So this is the market bottom after the first halving, right? So after the crash, it crashed down to 2. So how much is that gain going up to this market top right here? Right. So how much is this gain going to this market top? So that's around 62,000, right? Of course, not many of us could catch the bottom. If you could catch something between $2 and $12, that would be great, right? You'll be getting more than 100 times gains. So, of course, right here, the third halving event comes. Then it's on 9th of July. So on 9th of July, the price is about 620. Then this is where it goes up to 19,000 during December. So that's around 32 times. If you have invested 1,000 US dollar, then you could actually get 32,000 within 1 year, 5 months. Right. So of course, the market bottom was here, 162. If we talk about 162 to 19,000, which is around 2 years, so that could be amounting to about 12,000% gain, right? Okay, then this is the latest halving event, this is the most discussed topic right now. And this halving event is about 8,189. All right, so it went just last 2 months, it went up to 64,000, and that's around 7.9 times. So, which if you have invested 1,000 US dollar during the halving event, and you only get about 7,900. I mean, this is better than most stocks, of course, right? But of course, compared to the previous events, this is a lot less. It's only 709 or 800%, right? So, and this has lasted for between the halving event to the market top is around 11 months. And the crash is only 54%. And most people asking, is this really a crash or reaccumulation before it sends the price further up? So this is when we say not a lot of us know, I would say, whether it's reaccumulation or we are really at the market top, and it's crashing down all the way to 80-90%. So no one knows right now. But of course, there's some websites we can see where the whales have already accumulated 6-7 billion during the month of May. All right, so well, of course, let's go further. And when we look at these charts right here, we know that this halving event, it creates boom and bust cycles. So now the first one it started on July 2010. So immediately we see a markup there. All right, there's this bear market. So we see markup, bear market. Then every time before there's a halving event, so this price like a 1 year before, this is like 1 year before, then you start to see price accumulation or even an early markup stage from there. So once the once the so this is like this blue line. Let's say this is actually a first halving event, first halving event. Then this second blue line is the second halving event. So every time you can see that the halving events, uh, they actually is like a catalyst to the markup, the bull market. All right, they call this bull market, where the price really explodes and go up. But of course, in between, you can see that in between there is some correction. But these corrections are not small. Actually, we are actually plotting this in logarithmic chart here, which means these corrections are deep before it goes into a parabolic market top, and then it goes into 1.5 years bear market. All right, between 1.5 years bear market, and this is where we can say it's accumulation. Then you have early markups. So early markups always can be seen before the halving event, and then you have like after that you have markup stage and reaccumulation somewhere in between. Then market top. Then you have okay, this is like a third halving. I've not written there, third halving. So now, then you can see around 1 year bear market, then market bottoms right here. Then you have accumulation phase. Then you have flush out weekends, and then we have markup here. And so far, the price has dropped about 54% from the top. So this is where everybody's wondering, where the hell are we going, right? So for me, it doesn't matter because we know that there are more halving events to be scheduled. So it's less like if we hold another few 4 years more, then we'll see some price increase in Bitcoin. So right here is that we know like what we have actually seen in tabulation. See, first we have 10 million Bitcoins, 10.5 million Bitcoins, first halving event. Second halving event we have about 5.2 million Bitcoins in this 4 years circulation. I mean, it is added to the circulation. So every time when a miner gets a block, so there will be only 25 bitcoins added within 10 around in 10 minutes time. All right, every 10 minutes you have 25 bitcoins added to the circulation. So then it gets less and less, you can see. So all right. So now, if you want to see closer what has really been happening in all these cycles, so this gives us a big picture, right? And it's actually in logarithmic character right here. So now the first halving is that we know that we saw about 63,000 gains, or actually 50 something thousand. Well, I need to do some corrections right there because it started, with a 0.05 or 0.06 difference. It's between 53 and 63,000. 63,000 and 53,000 differences. So that's quite a lot. If you increase that to about 0.06. All right, so it's around there, like a 0.05 and 0.06. So the difference is like the other one was, there's like 0.06 is about 53,000. Right, so so we saw this was very parabolic, and then like I said earlier, you have to be very good in price action. And then most of the time you see the reaccumulation, it has some deep correction before it goes really parabolic upwards. And this is daily chart, and you can see like within 3 days it just dropped like nobody's business, right? So it drops maybe about 20-30%, then it goes into bear market. Whew. All right, that's really volatile, right? So this is the first halving, all right? You can see the pattern is super volatile. From 32 US dollar goes all the way down to 2. And in between, of course, before going to the market top, we want to detail the part that because these are very sharp price action, I have to use logarithmic price correctors. So see, in the first halving and before the market top, we can see the reaccumulation or some corrections which goes down to about 66%, and the other one was around 48% before we really see the price action going to market top. Right, pretty scary, right? So right now, the second halving, well, it was about, we took the lower price about 12.1, about 10,000% gain. So it goes up to market top again, and this is also again a daily price action, and this gives you some time because it goes down a little bit. Not too, it actually presents a double top right here if you zoom in. So we actually zoom in a bit later. We'll talk about more about the price action later, right? But this one is more like a slow bleeding all the way down to the. I mean, of course, here is quite drastic. You can see huge swings right here, and then when then slow bleed around here. So the angle changes, but this is where you have early accumulation. So when you have markdown phase, this is like late markdown phase, and then you have early accumulation right here, right? So I mean, if you're not sure about this market price structure, I will actually have another topic detailing those market price structures that you'll be able to know what is the accumulation and distribution or markup and markdown phases look like, right? So okay, don't get too worried with that. And so you see, this is first halving the entire event, right? But notice that after the halving event, you can see there's a price surge here, and then boom, there's a huge drop, right? Before it surges up. So now, what is the size of that correction right there? So that correction is about 82% right here. Before you have an entire like run here, you can see there's a correction, and that correction lasted for maybe about from April to August. All right. Wow, that's pretty long. So that's like half a year correction before it starts to go up to market top. Right. So these are like the reaccumulation events that you can see some small reaccumulations right here, but this is considered major before reaches the market top, and then here it drops down to 80-90% crash again. Truly, I mean, the volatility that I've never seen before in all my life of trading. This is even more volatile than penny stocks, right? And of course, the biggest market crash that I've seen is actually the subprime mortgage, which is like in Dow Jones 54%. But these guys are like crazy buggers, and so this is a closer look. Now this is a in this event right here we saw that this crash was huge. I mean, yeah, it's a crash, right? Like they call it reaccumulation before it goes up here. So big traders came in. So this was a gain, right? The gain was about 2,000% after the second halving event. So this was just not long ago. Okay, you can see that's November. It took about from like about to actually April. So within 5 months, there's a parabolic gain, then flush down, reaccumulate right here. So there's a huge flush to shake out the weak hands after this 2,000% gain. Right, so 82% crash on the reaccumulation. That's a lot. So the third halving, this is the entire structure looks like. Third halving, 9th of July 2016, began about the low of 620, went all the way up to 19,000. Pretty historic right there. And of course, you see, before it reaches parabolic surge, there are more corrections in between, right? So these corrections often get people very confused because the parabolic, I mean the volatile nature of cryptocurrency. So a lot of people they sell out before the next ride upwards. So it's very hard for you to tell when is the last ride up. It feels like what I normally say is that it's like a musical chair. All right. I mean, if you have ever played with musical chair before, maybe you start with like 10%, and every time the music stops, then there's less chair for you, right? So someone must be kicked out during the musical chair game. So musical chair game is like you cannot predict when the music will stop, right? So the person who's controlling the music will stop anytime as they please. So it's almost the same like this. I mean, Bitcoin markets or crypto markets, huge, 84% crash to the low. Okay, so right, let's look a bit closer. Now, right here, this is a linear chart. If you look at logarithmic chart, we'll be able to see the corrections better. So after halving, then the first correction was 35%, then you have 34% correction, 40% correction in between. So you have like 4 corrections before it reaches the top right here. So you see, it's pretty hard, right, for you to actually see which is the last right. No one really knows. Okay, this gives out about 3,200% within 1.5 years. Lasted quite long than the last two ones. So now this is the latest one that we saw. So and right after the halving event, which is around 11th of May. Sorry, not 11th of May. This is actually 11th of May 2020. All right. So there's some corrections to be made right here. Fourth halving started about 8,200. Then rises up to 64,000 or 65,000, let's say, for instance. It's about 800% gains within 11 months right now. So, well, this is where a lot of people ask, we have actually a market crash 54%. JP Morgan and some guys say, okay, they see bearishness from now on. If you search the news, you see JP Morgan is having a bearish position on this Bitcoin right here. So that's in the reports, right? But what I can still see some between this period, some Bitcoin wallets accumulating around USD, okay, more than USD, about 6 billion right here, right, in some of the websites. So, well, okay, I wouldn't end this at the moment. I just want to go to the, right, so now, this is what I've done. I've done some marking in here. You can see that the price, even though the halving event was at 9th January 2009, so but the price action where we can see in our charts, the latest was actually 12th July. Okay, actually more. It is this is weekly chart. So if we go to daily chart, if we go to daily charts, yeah, right, 17th of July, right, 17th of July 2010. So I just assume that this is like the halving event, and directly, I mean, straight away you can see there's a bull market triggered, and then you have like a short bear market. What if we go to linear? All right, but okay, since it's so volatile, it's always better to use a log scale. All right, so I'll go back into weekly. If you want to see the exact dates, it's always in my tabulation. You can always rewind this video. Yeah, let's see. Oof, okay. So now you can see that right here, maybe I just, okay, increase the size a little bit. So as you can see, the bear markets in the first one don't last very long. And so every time, let's see, this is the second halving event, right? So this is like, you have, like, it starts from November 2011. The halving event is about 2012 November. So it's around 1 year, exactly around 12 months. So 1 year before the halving event, you have accumulation happening right here. Right, this is accumulation happening right here. So now it's not always the best time to buy during. I mean, if you buy during halving event, yes, you get strong catalysts up, right? Maybe some reaccumulation in between. Don't get shaken out because of that, and then ride it all the way up. So this ride all the way up takes around 1 year. The longest is 1.5 years. The shortest now is 1 year and 1 month. We'll look into that tabulation again, right? So in between, there's a shakeout, or we call it reaccumulation. So again, we want to see, okay, this bear market lasted longer. So the bottom, okay, this is quite subjective because the bottom could be either this one or this one. We call it double bottom. So it could be something like this, all right? And okay, you can see that the bear market was about 1 year. Okay, market top 25 November 2013. Okay, so this is January 2015. Yeah, around 1 year. Okay, so then halving event is around the 4th July 2016. Then here it's about January. So let's look at the second bottom, right? It's about August. All right, August, between July and August, you have like, now this is a part where you have like early accumulations. Actually, the accumulation happens okay, if we talk about big traders, they often accumulate in places like this. All right, they shake out people. This is where most of the traders don't go long. I mean, retail traders, they go like, maybe they go short, and this is where there's a shakeout candle before it actually sends the price up. So you can clearly see that 1 year before the halving event, right here, it's this is like, if you buy before that, let's say if you buy before that. Now, what is like buying before the halving event? Because if you buy, okay, if you buy at the halving event, then that's like, okay, let's change the color a little bit. Okay, in this case, 2016, yeah, okay. Okay, that's around 3,200% gains, right, from halving event. But what if you actually buy before the halving event, like 1 year before that? So you would get like 9 times. I mean, sorry, not 9 times, 9,000% gain on 10,000% gains if you buy during the early accumulation phase before 1 year before the halving event. You can see that you get better gains because you're like buying the halfway up. And if you're buying in these corrections, you have very short time to reach the market top. These corrections right here, right? Nothing wrong with that. It's just, if you're wrong, then you just have to wait for another few more years to ride it out. So, if Bitcoin or cryptocurrency crashes, it's like 80-90%, it's near the bottom. Couldn't go lower than that, right? So now, okay, see, this is like 1 year before. Okay, this still very little. It's like 1,000 over. Not a lot of the Bitcoin holders, they say that this is just reaccumulation phase, right here. So it's just shaking out the weak hands because it's flashing down a little bit. Then we see institutions actually coming in a little bit more right here. But it's hard to track those news. It's really hard. All right, those info. So this is just like around 1 year. It has really been 1 year, and markup phases are normally 1 year plus. So if we look back into this tabulation right here, the detailed tabulation that we have marked. Okay, see, from halving events to market top, the longest, right, recorded. It's about the third halving is about 1 year and 5 months. So now this one we really don't know yet. I've just actually placed this is because we saw uh, we saw last 2 months it topped up to about 64,000, 65,000. So I just put it at 11 months right here. So yep, it's between 12 months is the shortest, the longest is 1 year, 5 months at the moment. These records are not a lot for us to say that we're just starting to see some patterns, historical patterns. It's not a lot of data, historical data for us to see. Okay, so as more halving events comes in, then I'll start updating this table a little bit more in time. From time to time, right? So okay, I just want to say this is all I have for now, and okay, we really don't know whether this is a markup or this is the end of Bitcoin. All right, but if we really want to buy more Bitcoin, it's just like 1 year before the halving event. We buy at the accumulation phase, like in this chart right here. We buy. See, the blue lines are halving event. Remember that. So before the halving event, all right. So like this is the blue box right here. Right. Anywhere you find that the prices are quite low, then yeah, these are like 1 year before the halving event. All right, just right after the bear markets, and or if you see it's already from the market top, it has already crashed between 80-90%. Bam, time to go in, right? So now, when we talk about investment, is that because this Bitcoin or cryptocurrency, they don't offer a lot of fundamentals of research for us. We can't. They are not cash generating machine, right? So they're unlike stocks. You can actually evaluate the intrinsic values, and you can actually evaluate the business models, whether they're monopoly or not. And we buy the dips of monopoly companies. And when we do that, we know that we are most of the time, or 90% of the time, I'm sure that I'm right when I buy the dips of monopoly company. But when it comes to this, and if you have a whole huge investment portfolio, like let's say, okay, then maybe this is like, 90% of your money might be in stocks, right? Strong fundamental stocks, and this is like 10% of your entire portfolio. So if it's like, it's giving you like 10 times more, then you could actually turbocharge your portfolio. But always have to remember that these bitcoins, we do not have a fundamental value to research. So I just have some small allocation right here. So okay, do not want to take more time, and thank you for watching, and happy trading and investing. Striker X here signing out.